Uncertainty kills. It kills markets. That's what we're going to talk about today. Let's get into it. Do me a favor, like this video, subscribe to the channel, hit that notification bell if you would, assuming you want to hear from me. So yeah, let's talk about market uncertainty. You know, it really drives the markets. It has for a long time, and it's probably not going to change. When you look at, you know, the way things are going right now, it all points to uncertainty. Markets, for those that haven't quite figured it out yet, markets don't like uncertainty, and they certainly aren't rational. Markets move just based on crazy irrational uncertainty. And if there's any one thing that I've noticed over the years, it's that, and it hadn't changed, and it's probably not going to change. So let's talk about the uncertainties. And I think when you look at the uncertainties, I think that it's totally understandable why we're in the situation we're in. You know, we've got sticky inflation. You know, inflation hasn't really changed a whole lot. I mean, it's still up there. I mean, if you're going to the grocery store, to me, that's where I notice it the most, is at the grocery store. A pound of ground beef is unbelievable how expensive ground beef is. And, you know, we had eggs were high at one point. They've come down. And that wasn't necessarily just, there was some, I think, bird flu. There were some things that drove a lot of that for a period of time. But, you know, the grocery store is where I notice it the most, where I'm like scratching my head going, wow, these prices. And I think for most people, we have to eat, right? So that's where we see it. So inflation is still sticking around. It's come back a little, but it's still, inflation is outpacing wages. People aren't making enough money to outpace inflation. So what do? They pull back. They don't spend as much. And then they look at alternative ways of printing more money than the government does to outpace the inflation. What do? They invest it. And they invest in a higher risk because they realize if they don't, they're not gonna catch up. They're gonna keep falling behind. Interest rate cuts. Yeah, that's another one. We've been thinking that we were going to get multiple interest rate cuts going into the end of 2025. Well, we've had a couple, but then there was, you know, fear that we weren't going to get one in December because Jerome Powell came out and said that cuts in December weren't necessarily a certainty. So what does that do? That's uncertainty. So the market freaks out because of it. And that's not good. But now the sentiment has changed. Now we've got the government's opened back up. We've got some unemployment numbers coming out. Not looking too good. So when you have unemployment numbers not looking good, the Fed looks to stimulate. Because they want to control inflation and unemployment as their main mandates. So that's getting interest rate cuts is going to be helpful, and so we're pricing in the markets that we aren't going to get them, or the uncertainty that we're not going to get them. The recession fears. You know, we're sitting here looking at jobs being laid off left and right, and a lot of them in tech, and so there's a lot of confusion right now about climbing that big hill, by the way, that one. Kind of planed off on my weight, actually, lately. Kind of hanging around that 186, 188. So I'm going to have to, I want to get that second number starting with a 7. Anyway, back to your regularly scheduled programming. So yeah, the recession fears. You know, we've got big companies, Amazon, Microsoft, the list goes on. Massive layoffs going on. A lot of them in tech. Why are those jobs being eliminated? Because AI is replacing them. So that's where you're going to start seeing it, is in the tech side of things with AI, because now AI can code, do a lot of the coding. So that's another thing. The recession fears, the uncertainty. Are we in one? Are we not in one? And you know, that's I think a lot of people think that we are in one when you start looking at the big picture. Our policy and regulatory uncertainty is another uncertainty. I mean, you know, Trump is you know, love him or hate him, it's like what the wind blowing. That joker works so fast and makes decisions so quickly. The country can't keep up. So if for one day we got tariffs on, next day we got tariffs off. One day we're drilling China, the next day we're not drilling China. One day we're, getting back and forth with Canada and pissing them off and not pissing them off. And, it's just all that is uncertainty. And the tariffs, to me, has been one of the main contributors of the uncertainty. Again, markets don't like uncertainty. They like to know that, no news is good news in the markets, so to speak. And so it's, when we get all this policy change by the minute, this is what happens. We've got also uncertainty is elevated valuations in companies right now. In other words, the AI bubble. A lot of people think we're in an AI bubble. I see where they're coming from. Everything's gotten so hot, so inflated. But the reason that's happened is because we've printed so much money. There's so much money that people have, and we've debased the dollar so hard. And if you watch my videos, you understand when you debase the dollar that hard, it takes more of them. So the asset itself hasn't necessarily changed value. It's the other side of the equation that's changed, and that's the dollar. It's lost so much value, it takes more of them. So you're seeing prices visually higher. The value technically really hasn't changed a whole lot. It's just that divisor, the US dollar into it is what's caused the problem. So we've got that uncertainty. We've also got geopolitical and global supply chain shocks. We've got the Russia-Ukraine war. That's been hanging over our head. We've got, all these Iran. That was a thing for a bit. We've got all these, China playing tough guy and all this stuff. So those things aren't those aren't good. There's more uncertainty. Are we going to war or are we not going to war? And then the supply chain shocks with the tariffs. Is there going to be tariffs on products coming in the country or not? And how much is it going to be? And, that causes markets to be uncertain. And then the consumer and business sentiment is softening. And how do we know that? Layoffs. We see these companies that are releasing earnings and their forecasts, and they're pulling back. It's like, we barely made numbers, or we just came short, and we see this not being good in the future. There's another example. So we got a lot of uncertainties in the market. And actually, when you step back and you look at it, we're actually doing pretty good considering all of this uncertainty. Oh, and I ain't mentioned, let's throw in real estate in there. The affordability crisis in real estate. The average age now of a home in America is 40 years old. That, to buy, your first home has now moved all the way up to 40, where it used to be 25. Back when me and my wife bought our first home, that's about what it was. We were in our mid-20s when we bought, and we got married. And you can't do it anymore. If you're a Gen Z, a millennial, young millennial, you're priced out. You don't have enough, and if you're not, haven't been around long enough to invest in order to accumulate enough wealth to be able to go in and buy something that's higher. So the Gen Z and the millennials have been kind of screwed in this whole game, unfortunately, and a lot of that's our fault. The boomers and the Gen X's, we've allowed this to happen, and so now these next generations, they're finally paying for it. And then the debt's another reason. Our debt in this country is 38 trillion, and it's not even showing any signs of going the other way. That's got to reckon at some point. That just can't keep going like it is, and like nothing's, oh well. The government's going to try to print their way out of it. And what's that mean? More dollar debasement. That means prices are going to keep going higher. So we're kind of in this now race of just making things inflate and higher and numbers be bigger. And we're just kind of just chasing that. We've gotten to the point of no return, I guess you could say, with the debt. So, and that's why people are turning to Bitcoin. You're probably going, they ain't turning to Bitcoin right now. The smart ones are. They're buying right now. That's a whole nother topic. I know I am. Gold, silver. They're playing the hedge against the government's nonsense. So what happens when all this stuff starts to occur? Businesses stop investing. They don't have the capital. They're cutting back. Why would they be investing when they're cutting back? The exception would be the big big tech players that are coming up with energy solutions. They're opening up data center capital investment that they're putting into AI and that whole AI infrastructure. It looks like Berkshire Hathaway just dropped a load on Google Alphabet, and banking on their AI is going to do really well. And actually Google just introduced Gemini 3, and the reviews on it have been pretty good. And I use Gemini, and I use ChatGPT. Those are my two top. Sometimes I use Grok because I'm on X a lot and it's convenient, but I would probably rank them third. Each for their own with that. Some are a little bit better than other things, but I've been really impressed with ChatGPT. The amount of stuff that it can do is amazing, and Google Gemini. So Berkshire Hathaway just dropped a ton in it. It believes in that. Google made a big investment into TeraWulf, which is an infrastructure play. The companies like CoreWeave, IREN, these are all companies that are expected to do really well. If you're into utilities, that's another big play that I've been looking to get into pretty heavily, is energy. That's going to become high demand. We're going to start investing more and more in that. So businesses stop investing, consumers pull back. We're already seeing that now. People are just tapped out. The consumer credit card debt right now in this country is at an all-time high record, and it's not stopping. Delinquencies, I saw this too. 90 days past due is the credit card delinquencies that are 90 days past due is the highest it's ever been on record. People are strapped. Also, the Fidelity came out the other day and said that the hardship withdrawals on 401ks is at the highest it's ever been. People are having to dip into their retirement in order to make ends meet. These aren't good things, folks. They really aren't. So what else happens? Investors panic sell. We talked about that the other day. And it's all emotion. We've talked about patience, panic selling. The ones who understand that all of this stuff is always temporary, we always come back. We've had big events. We've had the pandemic. Look at what happened. Things crashed. What did we do? We came back up. Back in April, when Trump announced the tariffs, we crashed. We crashed like 30%. And look, we came right on back out of it. And then you go back to the financial crisis, the 08, 09, all that stuff. We crashed then. And we're way higher now than we were then. So, and then you look at the famous things that have happened in the past with the stock market, big crashes, when we've had just total collapses of the market. Look, we've recovered. If you have a long-term mindset, other than just like right now, right this second, and just total, everything is one extreme to the other, fear and greed and panic and this, that. If you have a longer horizon on things, this is just a blip. I was talking to a buddy of mine, I guess it was yesterday. He called me, planning on getting together over the holidays. He's like one of my best friends. I have tons of respect for this guy, and we're getting together here a couple times over the holidays. And we were talking about all this, and he was asking me about Bitcoin, and it's like $85,000. And he's like, "Hey man, what do you think? Is now a good time?" He says, "In my mind, I had 85 grand is a good place where I wanted to buy some more. What do you think?" And I'm like, "Yeah, I like it. You do you, not financial advice, but you're kind of lining up with what I'm thinking here. 85, 75. It wouldn't shock me to see Bitcoin go in the 70s. And so how would I play that? A dollar cost average. I wouldn't go all in. Just go all in at 85. If you have, let's say, $10,000, just using that just as an example, I would probably put a couple grand in it, maybe a quarter of it, a fifth of it. I'd put that in around right now. And then let's roll for a little bit. See if it goes down and gets to around 80. If it gets to around 80, maybe in like $5,000 chunks, right? Drops, or something along that line. Gets to 80, I'd go in with another 2 grand, $2,500. It gets down to 75, I'd go in with another. And I'd just keep going in, and in case it does keep going. Now it's like, oh, we're going to catch a falling knife. Maybe. I think we're running out of sellers of Bitcoin. And there's a lot of big players that are soaking it up right now. They're buying this coin that's on the market right now at these prices. Michael Saylor's buying more. They're the big players, and they're taking advantage right now because they saw it up in the 110, 120, 125 range, and it was high, and they felt late. Now they're feeling like, ooh, here's my opportunity. So the smart ones are going in when we've seen this huge drop. Also, too, capital becomes more expensive. I mean, it just is. I mean, it's just more, to get a hold of capital now, it's just costs more and more and more. That's what starts happening as a result of uncertainty. Capital gets more, liquidity starts getting crunched. And all of that stuff just starts compounding. And then markets start mispricing assets. It doesn't know, is it this or is it that? And you start getting these kind of weird fluctuations that are, hard to put your finger on. That starts happening. Innovation starts slowing down. And when we're seeing that with some tech layoffs, I think not maybe so much in the AI space and the AI race. I think that spending is really still going strong. And look, if it weren't for Nvidia this last week blowing earnings away, I mean, they're like propping the world up right now. So everybody's eyes are on Nvidia, because once Nvidia starts falling, oh my goodness, that's not going to be good. So people are joking that Nvidia is holding the world up right now. In a lot of senses, that's right. But I think you got Gemini and Microsoft and some of the other players that aren't out of the game, and they're in it too. And watch Google. Google's really cranking it up. They've got some chips that they've been working on now for a while for quantum computing, that and you pair that with their AI initiatives, and Google's, look out. And here's another thing too. I noticed that the CEO, and it was the VP, the head of their cloud division, their initiative is to double the compute capacity every 6 months is now the requirement. With AI, that's how much demand is being put on AI. I mean, that you talk about, that is some massive initiatives in growth. You're talking about doubling compute power every 6 months. I mean, wow, that is, I mean, you already got tons of compute. Can you imagine? So then you have to have energy to drive all of that. So we're going through a serious shift right now, and where things are. And also what ends up happening is wealth transfers from the many to the few. And I'm going to do a video on money. Money flows bottom up, folks. It doesn't flow top down. And it's just the way it is. And so that's why you hear the saying, the rich get richer, the poor get poorer. That's exactly right. Because the momentum that wealthy people have already is in their favor. The compounding effect of money just starts going exponential, and it's hard to do when you have nothing. That's why it's so important when you're young, and even if you're not young, go without, invest. Put your money in good, solid growth assets that are hard assets that are very valuable, they're very desirable. And you do that, and you'll have a chance of getting out of it. Crypto is another. I mean, crypto, I know you people looking like crypto. What are you talking about, Gen X? God, crypto's just the worst thing in the world right now. But talk to me in 6 months, a year from now, or maybe even sooner, maybe even a little later than that, and tell me what's happening when and then Bitcoin is up to $175,000, $200,000, and everybody was crying, and it is 80, 85. Look, I've seen it go up and down, and I've just become numb to it. I'm not worried about it anymore. I'm not in this for the short haul. If you follow me on X, which Generation X guy on X is my handle, I just did a post that it was yesterday, that hey, I'm cool with it going down. I'm cool with Bitcoin going down in the 80s. You know why? Because I'm forever. I'm holding this stuff I'm in it for the long haul. And the lower it goes, the more of it I can get. And one day my kids will be glad, and they'll thank me for it. And so, and not only that, but gold and silver. I've been on this tear with gold and silver too. Those are like my three favorite investments right now. And it wasn't long ago, some of you that know me, I was not a gold silver guy. I was all digital. Just didn't make sense. And I've changed. My position on it has changed. Now, I'm not saying that digital's crap like a lot of people do. They just always go into zero, it's total crap. I don't say that. I'm the complete opposite. But I've started to realize that what if I want to have all options on the table if and when I need it, because you never know. I want the option of Bitcoin. I want the option of gold. I want the option of silver. I want the option of guns. I want the option of ammo. I want those options. I want the option of land, having land at some point, and being able to pay total cash for it, and be able to buy whatever I want, not worry about it, and have it as part of the estate, the portfolio. I want to have all options at my disposal, and I'm working on that right now, as we have been for a while. So I encourage you to look into it as well. Of course, not financial advice. You're free to do what you think is best, but I appreciate you subscribing and joining in and leaving comments and friendly debate, feedback, ideas, thoughts. That's great. For all of you that are new to the channel, welcome aboard. I'm Gen X Guy. Glad to have you on here. It's a fairly new YouTube channel. I've started about 2 months ago. It's growing. Of course, I haven't gotten 1 million subscribers in like a nanosecond or anything, but that's fine. Nothing has ever happened overnight for me. It's been a long grind and a lot of hard work, and that's in my DNA, and we'll do it. So anyway, that's the video for today, guys. I just wanted to, uncertainty kills, and that's what we're in right now. But it's temporary. Keep your head up. Keep positive. Do your research, find the investments now. There's a lot of great opportunities out there right now. Now is where you enter in and take advantage. And then 6 months to a year from now, you'll be glad you did. So do me a favor, like this video, subscribe to the channel, hit that notification bell so you can be notified, and check out one of these other videos that pop up here on the screen if you would, and you'll have a good day. And happy Thanksgiving. I plan to do some videos over Thanksgiving. I'm not exactly sure how many or what. I'm going out of town. I'll surprise you on where I'm headed, and hopefully with a video. Y'all take care. Have a good day. Gen X Guy out. See ya. Bye.